Welcome back. For the third consecutive month, Corelogic downgraded their housing market forecast over the next 12 months. In today's video, I'll share their real estate market predictions through July of 2024, as well as the top 5 cities in which they believe home prices will decrease the most over the next 12 months. So, I have a lot to share in today's video. Thank you so much for joining me. I appreciate you. And let's begin today's video. So here's Corelogic's latest report here, just posted on September 12th, which is today. So I hope you guys appreciate these timely housing market updates. And of course, if you do, please hit the like button. And of course, consider subscribing as well. All right, let's talk about what happened this July compared to last month. So compared to last month, home prices based on Corelogic's HPI, or their home price index, increased by 0.4%. But on a year-over-year basis, from July 2022 through July this year, prices increased by 2.5% on a national level. So big picture here, prices increased by 0.4% compared to the previous month. When you analyze that, that equates to a 4.8% increase in prices over the next 12 months. Of course, a lot could change though, and I'll definitely keep you posted. So I first want to share their previous housing market forecast, and then I'll share their most recent one. So for January 2023 through January 2024, at that time, about 9 months ago, they predicted prices were going to increase by 3.1%. Then the following month, February 2023 through February next year, a gain of 3.7%. That marked the third consecutive upward revision in their 12-month housing market forecast. Then in March, they called for a 4.6% increase in prices. That was the fourth consecutive upward revision. Then in April, it was actually flat, 4.6% over the next 12 months. Then in May, they actually called for their first downward revision in their 12-month housing market forecast, a gain of 4.5%. Then in June, they saw another slight decrease as well, calling for a 4.3% increase. Then their most recent forecast, which is July 2023 through July next year, is a 3.5% increase in home prices on a national level. That marked the third consecutive downward revision in their 12-month housing market forecast. Here's a chart showing just that. Their forecast is at 3.5%, and also they're forecasting that prices will increase by 0.4% from July this year to August. Typically when I make these videos, I get a lot of comments regarding how are their previous forecasts, how is it compared to what actually happened here? So I want to share that with you as well, because 1 year ago, their forecast, which was July 2022 through July 2023, their forecast was a 3.8% increase when the actual gain was a 2.5% increase. Speaking of home prices on a national level, increasing by 2.5% this July compared to last July, that's after we had 2 consecutive months of gains of 1.6%. According to Corelogic here, this annual reacceleration reflects 6 consecutive monthly gains. And that's because home prices have increased ever since February this year, a gain of around 5% from February through July this year. They also note here there was 11 states in which home prices have decreased compared to last July. But since those markets are experiencing inventory shortages, that trend may be short-lived. Therefore, Corelogic is predicting that those 11 states that saw year-over-year decreases may post gains on a year-over-year basis this October. This more or less has been what I've been talking about on the channel for quite some time, because last year we saw a giant surge in rates going from 3 to about 7% in less than 1 year. And that really shocked the housing market, which caused home prices to decrease greatly in the second half last year. Compare that to this year, it's night and day difference. We have elevated rates at around 7% ever since late July. We're not seeing this giant surge of inventory like we saw last year. Because of this, I would imagine that we're going to see fewer and fewer cities and fewer states experiencing decreases in prices compared to 1 year ago as we approach the fall months here. Of course, a lot could change though, but this really depends on the balance between supply and demand. We have a low level demand, but we have even a lower supply on a national level here. So speaking of that, I want to share this with you guys as well. I shared this with you guys maybe about a month ago because there's been this kind of like myth that we have about the same number of houses for sale right now compared to the run-up of the Great Recession here. So look at this. This is according to calculatedriskblog.com, and the source here is the National Association of Realtors. So from January 1999 through approximately January of 2018, we had over 1.5 million houses for sale on a national level. This July, there's only about 1.1 million, far less than the run-up of the Great Recession. So for example, back in 2000 and let's call it 2001 through 2005 or 2004, at the end of 2004, we had about 2 million to about 2.5 million houses for sale compared to only about 1.1 million right now. And after the housing market was starting to recover in 2012 through again and back in 2018, again, we had around 1.5 to about or almost 2.5 million houses for sale. And now we have very low levels in the number of houses for sale. Now, speaking of the states that have experienced the biggest decreases, some of those two states are California and Arizona. So I briefly want to share this with you guys because here's altosresearch.com. So they actually looked at inventory levels on a weekly basis here. The most recent week they have is September 8th this year. Approximately 12,000 houses for sale in the state of Arizona. Compare that to 1 year ago, there was 19,000. Also at 12,000, this is about half as much as we had back in 2019 when there was about 24,000 houses for sale statewide in Arizona. In 2018, this time, there's approximately 27,000. Also, as I mentioned, inventory absolutely spiked last year, whereas this year, we're not seeing that same increase of inventory levels. So this is just absolutely crazy because comparing this year to last year, it's just like night and day difference here. Let me just zoom in real quick and we'll get back to the video here, or not the video, you're still watching the video, get back to the report here. So inventory levels, let's just call it the trough in, let's call it March, was around 5,000 homes for sale in Arizona. But by the time we hit this time last year, there's about 20,000. So inventory levels more or less quadrupled from March through early September last year. Whereas this year, we haven't seen very much movement all year. Let's just call it the trough is probably in June-ish. So June this year, around 12,000 homes for sale. Now there's only 12,109 houses for sale. Night and day difference compared to last year's levels. Also, when looking at California, right now there's approximately 33,000 houses for sale. 1 year ago, there was about 46,000. But at 33,000, this is approximately half what we had during pre-COVID levels back in 2019. At that time, about 64,000. And in 2018, around 70,000 houses for sale versus only 33,000 this year. Here's a look at inventory levels in California ever since January 2022. At that time, there was around 17,000 homes for sale. And then by the time we hit early September, there's around 46,000. Compare that to this year. To start the year, there was around 32,000. Now there still is around 32,000 houses for sale, just under 33,000. What I mean by that is that inventory levels tripled during the same time frame, whereas this year inventory levels are absolutely flat. And because of this big issue regarding a lack of houses for sale, this is actually causing home prices to not decrease as they should, given the fact that average rates have been above 7% for a 30-year fix ever since late July this year. Of course, time will tell, and I'll definitely keep you posted with latest developments on that. In any case, let's get back to Corelogic's real estate market predictions, because according to their chief economist, she stated the following. Nevertheless, the projection or their forecast of prolonged higher mortgage rates has dampened price increase forecasts over the next year. Because we have this environment in which rates are still remaining very much elevated, again, over 7% ever since late July this year. This actually has caused them to revise downward their 12-month housing market forecast for the third consecutive months. But as there is still an extreme inventory shortage in the western part of the US, home prices in some of those markets should see relatively more upward pressure. Corelogic also identified the 11 states in which home prices have decreased from July last year through July this year. Those states were Arizona, Colorado, California, Idaho, Montana, Nevada, Oregon, Texas, Utah, Washington, and Wyoming. In contrast, here are the states that have increased the most. Leading the nation was Vermont, a gain of 8.5%. After that was New Hampshire, New Jersey, Maine, Indiana, Connecticut, Wisconsin, Missouri, Rhode Island, and Ohio. As you can see here, the vast majority of these states here are located in the Northeast as well as the Midwest. And here's an actual map showing the changes by each of the states here. The biggest gains are in the Northeast and also the Midwest and also some southern states as well, whereas the western states have experienced the biggest decreases compared to 12 months ago. In fact, if you virtually kind of split the US in half here, excluding New Mexico here, all these western states have decreased by at least 1% compared to 1 year ago. One thing I want to share with you as well, here's their map from, July of 2022 compared to July of 2021. Obviously, when the housing market was at peak levels, right? So the map here is just night and day difference. The biggest gains were actually located in the South. So for example, in Florida, Georgia, South Carolina, North Carolina, a gain of over 20%. Also a gain of over 20% in Arizona as well. Additionally, at that time, there was not a single state that posted a decrease compared to the previous year. Every single state posted a gain of over 1%. And in fact, here are the top 10 states 1 year ago in which home prices have increased the most. Florida, a gain of 29.6% from July 21 through July 2022, whereas this year, Florida is not even in the top 10. Additionally, here's a map of the US looking at the top 10 markets, the price changes from July 2021 through July of 2022. Miami, Florida, giant increase of 27%. Phoenix up by 22%. Las Vegas also up by about 22% as well. Now look at the map this July though. Night and day difference here. Still strong gains in Miami, up by 9% compared to 27% from 1 year ago. But in the West, all these markets here, except for San Diego, is down compared to July of 2022. Las Vegas down by 4.8. Phoenix is down by 4.2. Denver down by 1.3. And Los Angeles experiencing a decline of 0.8%. Chicago is up by 4.2. Washington, D.C. is up by 2.7. And Boston is up by 1.3. And Houston saw a gain of 1% versus a 16.4% increase 1 year ago. Lastly, Corelogic identified the top 5 U.S. markets in which they believe home prices will decrease the most over the next 12 months. And every single one of these markets here, they believe is a very high probability of a price decrease. So leading the nation was Provo, Utah. Again, a very high probability that prices will decrease over the next 12 months. After that was Spokane, Washington, Cape Coral, Florida, and Fort Myers, Florida, Northport, Sarasota, Florida, and running out the top 5 was Lakeland, Winter Haven, Florida. With that said, thank you so much for joining me in today's video. Also, please leave me a comment below. What is your real estate market predictions over the next 12 months? And also, do you believe that a 3.5% gain in home prices is reasonable or not? Please leave me a comment below. I appreciate you. Thank you so much for watching today's video. Like and subscribe, and I'll see you on the next video.